Good morning, traders. It is Wednesday, October 25th. We're about 2 hours before the open. Let's start off today's video with a review of our last pick. I'm going to get into market analysis and why my picks have been bullish recently. Then we're going to take a look at some of the new features that have been added to Option Stalker Pro. We'll do some market analysis, and I'm going to set you up with a couple of new picks. AMGN was the stock that I highlighted as a long. This was Sunday, and you can see how the stock has retraced, but so has the market. So we've been waiting for this market bounce over the course of the last few days. We're getting into seasonal bullishness right now. Typically, the last few days of October, the first week of November are extremely bullish. In fact, the most bullish period of the entire week spans that 7-day period. So I still believe that we're going to see a bounce in here very soon. The stock itself had this long red candle 2 days ago, and you can see how it challenged this horizontal resistance level. Yesterday, the stock put in a nice day. It was able to recapture half of that long red candle. That's encouraging. We still want to see it advance and ultimately to take out the open from this long red candle. Why does all this matter, and why is this okay as far as the actual stock? Well, you can see that the stock has a tendency to rally hard and pull back and test that breakout. Rally hard, pull back, test that breakout. In this particular instance, you can see how the AVWAP-E provided support for the stock. So rally up, come back, test that horizontal breakout. Now we should see a new leg higher, perhaps even taking out this previous high right here. So I like what I see in the stock. Let's go into a 15-minute chart. You can see we've got this downward sloping trend line. Stock has been able to get above that. We had this bid check right in here. So I like Amgen. I think it's going to continue to move higher. There are a number of different ways that you can play a choppy stock like this. If the market starts to recover and we see it rally above the open of this candle here, which that opening price was about $280, let's call it. So if we march right through that $280 level, there's a very good chance that it's going to get back up above that 288.46 high and continue to move even higher. But it needs a strong market. Overall, stock has been very strong relative to what the market's been doing. So yes, I still like Amgen. I'm going to set an alert right there, GTC, click on the top of that candle. And now when the stock gets above that price point, I'm going to have my alert. If I wanted to, I could also set an alert using these two wicks so that the stock would need to rally above those as well. And that'll be a secondary alert that I can have set. So I'm going to click there, I'm going to click there. Now I've got a downward sloping trend line working as well for me. This will be a second reminder. If I miss that alert or I decide I don't want to take action on it, I still have this alert that will also trigger and remind me, hey, this is a really nice stock. So you could get long a call debit spread if the market looks like it's really cooking and the stock is rallying on heavy volume. That would indicate that the momentum is good and that buyers are there. If the stock were just kind of floating higher, decent bid, nice little price action, and the market were waffling around trying to break out, then you may want to sell an out-of-the-money bullish put spread, perhaps using the 270 strike price. If you wanted to be a little more aggressive, you could use the 275. When I do a 5-point wide spread, 5 points between the strike prices, I like to get $1 credit for that. You can see, though, that the earnings are coming up in about a week on Amgen. So we don't have a lot of time for this to play out. This could actually turn into a post-earnings play as well. We're going to talk a little bit about earnings because right now we are in the heart of earnings season. We had Microsoft and Google announce yesterday. Microsoft rallied pretty hard. Google pulled back pretty hard. So this morning the market's pretty balanced just as far as those two earnings reports, and the market is fairly flat. So we've got Meta after the close today. We have Amazon after the close tomorrow, Thursday, and then we have Apple announcing November 2nd next week, which is actually after the FOMC statement. That could be a really big window as far as the market being able to find some support and rally into year end. Before I get into market analysis, let me show you some of the features on the new release. And these are our columns, and you can arrange them any way that you'd like. So what I'm going to do is I'm going to right click on the column header here, and I'm going to edit columns. And these are all the variables that I'd like to watch and see. And so I've added them. I like to see our buy and sell signals first. That's just my personal preference. So I'm going to show you how easy it is. Once you've added these, if I go down the list, 3-8 moving average crossovers, those are exponential moving averages. If you like to follow ADX, you can see if the stock has had a breakout. And here you can see the buy and sell signals from our system. Is the stock breaking out through a compression? All the variables that are in the top of custom search can be used, and there's a reason for all of this. It's nice to have them in the columns. A new high of the day, a new low of the day. Is this an outside day? Meaning, did the stock get above the prior day's high? Did the stock get below the prior day's low? You'll be able to visually see this in the table, and it serves as another method for finding opportunities. So instead of having to flip through a bunch of charts, you can visually look right down the chart and go, hey, this stock is making a new low of the day right now. Let's take a look and see if it's got some momentum, then we may want to trade it. So these are all the variables, and I've added them over here on the right. And now what I'm going to do is I'm going to sort them, and I'm going to show you how I like to arrange mine. This is just personal preference. So the buy and sell signals, I like to start with a lower time frame and then work to a higher time frame. So I'm just going to drag and drop these to the top. And so I want to start with M15, and then I want to have my 1 hour, and then I want to have my daily. So it'll be short term to long term, and I'll be able to see how those buy signals or sell signals line up. Then I typically like to have a break. I like to see relative strength. So what I'm going to do is same thing. I'm just going to have the shorter time frames up on top so that at a glance I know how these are lining up from short term to long term. Now what I'd like to have between these two is I'd like to have a way of separating these. So what I'm going to do is I'm going to put in this variable right here, high of day, low of day, and I'm going to put it right between these so that acts. Now the stock's not going to be making a new high a day or low a day constantly throughout the course of the day. So this will act as a little bit of a buffer for me between these two different types of variables. So then I'm going to get all of my relative strength, M5, 15, 30, D1, and then I'm going to see if the stock is above the VWAP, and I'm going to be able to see if it's an outside day. Now these are not as important to me, so what I'm going to do is add volume, because I really want to see my volume in here as well. And I'm going to add RVOL. RVOL is going to show me the percentage increase over the 20-day average volume. Now it measures the elapsed time during the course of the day. So I'll be able to see if the stock is 120% of the normal average daily volume for those 20 days. Is it at 150%? Is it doing 2 times the normal volume? We need to have volume in order for moves to be sustained and predictable. So I'm going to add R-vol, and then I'm going to also add relative volume. So this is measuring the last 30 minutes, and I'll do the last hour. Again, you can add as many of these variables as you'd like, and I'm going to have those listed at the very end, and this is actually going to satisfy what I'd like to see, and this is how it actually looks in the table itself. So you can see this is going to be your this is going to be your buy and sell signals. And you're going to see if the stock is on the low of the day. Then you're going to get your relative strength, relative weakness. Is the stock putting in an outside day? Is it above or below the VWAP M5? Then what's the volume look like today? So this is just one way that you can configure all of your variables. And now you can see across the board here, Spotify, which we're going to be taking a look at in a little bit. It's on buy signals pretty much across the board. It has excellent relative strength. It's got an outside day, meaning it is above the prior day's high. It's above VWAP. Look at that relative volume. Look at that volume through the course of the day. So look for green dots across the board and then blue dots. It's that easy. So as you're flipping through these searches, it's very easy to identify, hey, there's one. Look at that. Just look for where you have all the green. NRG. I bet you this stock did really well yesterday. Bullish flag formation. Getting through that resistance level. You would have seen this coming up early in the day. Look at that stock grind higher. That's how you do it. Option stalker, there's a reason that we're putting all these variables into the columns. You can see all the variables that you can search for. This is binary. There's no coding. It's very easy. What's the time frame that you'd like to look at? If you wanted relative strength across all time frames, really easy to do. So relative strength versus the market. Click, 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 bullish across every time frame. You know that that stock is strong relative to the market across every time frame. You can do it for a single variable. You can mix and match any of the variables that you'd like. These lower variables, by the way, we're going to be taking out trend line breach, and we're going to be taking out climax. We're going to be reducing that and taking out these trend line and algo line searches because our next mission is to come down and have an area where you're going to be able to search for our automated trend lines. You'll be able to search based on the duration of the trend line. Is this a 6-month trend line? What's the distance between the start point and the end point? What is the angle for that trend line? What type of trend line is it? Is it a high minus? Is it a high plus? You'll be able to define all of those characteristics that you really want to search for. So I'm super excited about that. And then the next plan is that in 2024, we've got all of these variables databased. You're going to be able to go in and create combinations of variables and backtest them and see how they've performed, and even set up some entry and exit parameters so that you can get those results. So let's get on with some market analysis. Super excited about all that Option Stalker Pro does. We spent a ton of time on user interface and adding lots of features this year, so the charts display beautifully. I'm super excited about it. I know our members are as well. Let's take a look at the market. What's it doing? Why is Pete bullish right now? Why is he looking for this bounce? There's nothing to tell us here. We've got a series of lower highs. We have lower lows coming in. We've got the 200-day moving average right here where we've been able to find some support. OneOp has actually been working really well on a daily chart. Now we use it primarily on a 5-minute chart. That's what it's optimized for, but it does very often sync up with what we see happening on the daily chart. So you get a bearish cross right here, you get a bullish cycle right in here, you get a bearish cycle right in here, you get a bullish cycle right in here, you got a bearish cross right in here. So you can see how well it's syncing up. I think we're going to get a bullish cross here probably in the next 3 or 4 days. So the seasonal factor really is the last 4 days of October and the first 4 days of November. Typically that is the strongest week, if you will, out of the entire trading year. Most of that is because August, September, October are exactly this. They are weak months. If we take a look back, and we get the year-end bounce and year-end rally. I'm not looking for a gangbuster year-end rally. Why? Because we're seeing a stair-step pattern. On the way down, we saw a stair-step pattern on the way up. So this type of selling pressure tells me that sellers are always going to be nearby. We still have the Fed in hawkish mode. We've got stock valuations are relatively high. We've got higher interest rates are likely to start weighing on the economy, start weighing on consumers. Global markets are not going gangbusters to the upside. So we shouldn't expect that we're going to get a rally where we stack a bunch of green candles and immediately challenge the all-time high. It's probably going to be similar to what we're seeing on the way down. Rally up, test the bid, make a higher low, rally up, kind of like that Amgen chart that I showed you earlier. Stocks don't go straight up or straight down. The market doesn't go straight up or straight down. So what proof do I have that there are year-end rallies? Well, the proof is I've been doing this for 30 years. And I can tell you that every single year it's the same theme. Oh my God, the world is falling apart. We've got all of these negative things happening. This time is going to be different for sure. There won't be a year-end rally. How could there be a year-end rally? This is what we hear every single year. I believe that one of the reasons we see a year-end rally is because it's in the interest of financial institutions. And this business is about one thing and one thing only: money. Asset managers get paid based on assets under management. So when the market goes up, they have more assets under management. They make more money. So there's incentive for them not to sell into year end. They want the market to rally because when investors open up their year end statement, they aren't panic stricken. So one possible reason why we get these year end rallies, let's take a look at 2022. Remember, last year we were in a bear market. Well, what happened in October? Oof. Look at that sell-off from, wait for it, August. Steep sell-off. Very nasty decline. Now, the one that we've seen recently was more stair-step fashion, which tells us that buyers are engaged. When they're not engaged, you have these tiny little bounces, and then they're brief and they're shallow, and then blam, we're right back at it. Tiny little bounce, blam, we're right back at it. Well, you can see this is October 13th. So this would have been a couple of weeks ago or a week ago, and you see that we get this gap down and this massive bullish engulfing candle. This is in October. Then we start marching higher. So that's how your year-end rally unfolds. And I'm looking for something pretty similar to this, where you get nice little rally, little bid check, nice little rally, but overall we're going to see some upward price movement. So that's why my picks recently have been on the bullish side. So let's see what we can find. Let's take a look at the 5-minute price action, And you can see earnings reactions were going to be a big catalyst for the market. That's what the market is focusing on this week. The economic releases have been fairly minor, although tomorrow we're going to get GDP advanced. That is our first look at Q3 GDP. It's going to be a relatively important number. Now, mind you, it's very backward looking, but this is our first glimpse of it. And we're also going to see where the PCE deflator came in. It's going to be an important number Friday because, again, this is the first time that we're taking a look at it. We know that the Fed is always watching inflation. So it could weigh on the market. We've got the FOMC statement next week. So we still have some things that need to play out in the market. Excuse me. And while that's happening, we get this type of price action. So we've got earnings and interest rates. Those are the two things that drive the market. Well, we got earnings, heavy dose of it this week and next week, and we've got the FOMC statement. So we still might be in for a rocky patch for the next week or so, and we can expect this type of price action. So back and forth, very choppy. This morning, the S&P futures, I believe, are down about 10 points or so not a big opening indication as far as where we might go. Let's see how we react to those two earnings reports. As far as the D1 chart, you can see that we were able to hold the 200-day moving average, this black line, and bounce, bounce, bounce. Well, now we've come back and tested it again. I would have preferred, to be quite frank, a higher low in here. We didn't quite get to the 200-day moving average. I would have liked to have seen a bounce up in here, but we didn't get that. We actually took out the 200-day moving average. Some technicians would actually argue that this is healthier because you're destined to test it anyway, so let's just get it done with and test it. We have rallied above it. We closed above it yesterday. If we can start closing above it, and the news over the course of the next week is well received, and we start getting above this AVWAP-Q, which is, let's call it 430 or so, then we've got a chance for that release and to go higher. We've got a downward sloping trend line in here that can be tested. We've got the 100-day moving average. We've got the 50-day moving average. So there are a number of places where the market can pause during that bounce and then look for those higher lows as the market grinds higher into year end. So let's take a look and see which stocks we might have. Do I need to be out there rushing in to buy these stocks today? No. We need to see that bounce, and we need to see that follow throughout the bounce to tell us that buyers are getting more aggressive, that everybody's starting to get comfortable with the notion that this is support and we're getting into the part of the year where we can start to expect a year-end rally. So until we get through that 430 level and get through it convincingly, yes, this is a nice bounce on a day trading basis. If I start seeing some stacked green candles on heavy volume on a 5-minute basis, I'm going to be embracing it because I'm still expecting that we're going to be moving higher. So let's take a look at some stocks. We'll go through some searches. I'm going to keep this part of the video relatively short. And earlier I had mentioned SPOT. I mean, look at that. It's really nice. So let's click on it. Here we can see the B on the 5-minute chart means that earnings are before the open. Let's go into the daily chart. And there we can see a really nice compression right in here above all the major moving averages, and then we get this earnings reaction that blows through that horizontal resistance, and the stock closes on its high, and we're above all the major moving averages. Even before the earnings announcement, the stock had good relative strength and decent volume. So these are all great characteristics for a potential long. So let's say that the market waffles around a little bit and we're trying to digest these gains, which this is a horizontal breakout, and the stock did not have to travel very far to make this breakout. So we need that escape velocity. So we need to keep building on it, but there's a good chance it'll be drawn back in. It'll start testing this, especially if the market's not real strong. We want to see this price point hold. That open is 164. We want to see that 164 level. If we retrace half of this long green candle, that's okay. But then we want to see that support hold, and we want to start inching our way higher, particularly if the market is strong. If the market's strong and the stock is not participating, we don't want that. That tells us that there is still some selling pressure. If the market is down, 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 and the stock is holding this bar very well and starting to creep an inch higher, that's exactly what we want to see. That tells us that buyers are still very interested in it, that they believe in this earnings report, and that they believe in the guidance. So I like SPOT. I think it could also set up well for selling a 162.50, 160 bullish put spread, try and bring in a 50-cent credit for that. If you wanted to play it a little bit more conservatively, I think that also works. What has the stock done over the course of the last 3 months? Market down, 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 down. Stock compressing, holding its own. Buyers want to own this stock, or it would have been joining the market on the way down. It treaded water. That is relative strength. Blue line here is above 0. Yeah, I like this stock. I think it's going to perform well. So let's continue to take a look. I'm going to go through the list. I had actually seen a couple of other stocks that I liked. Verizon was one, and I'm going to go into the strong after earnings search. And this is where we're going to be able to find stocks that have recently reported in the course of the last 2 weeks, and the stock gapped up, and the stock is above the opening price post earnings announcement. Okay, so it's performing pretty well. Oftentimes what you'll see is a stock that sells off after the earnings announcement, but in a very stealthy fashion regains its relative strength and actually starts to rally. Well, if you just looked at the earnings reaction itself, you miss that trade. You go back and you look at a chart and you go, oh my God, look at how strong that stock has been since that earnings announcement. But then if you look at the immediate day after, it was weak, and that kind of took it off of your radar. So this is a way for us to go back and review what the stocks have been doing, and you can see really nice volume on AT&T. So here we've got a stock that released earnings earlier this week, and we're going to zoom out on this so we can get a longer term view of what's been happening with the stock. And you can see that the stock is above the AVWAP-E, it's above the 100-day moving average, and it's trying to get through this horizontal resistance. All of this is good. And we can also see if we put up some trend lines, we can see where they come into play. We've got some trend lines that the stock is also trying to break out through. Higher, low, triple bottom actually here, because we're consistently making higher lows. We've got this trend line working for us. We have a bit of a wedge formation between these downward sloping trend lines and upward sloping trend lines, and we're breaking out to the upside of it. I like what I see in T. And when I was going through my previous search, I had also noticed that we had Verizon on the list. And let me click on Verizon. So telecom's getting a little bit of a bid. Now, this has a kind of a double bottom low, but you can see how we actually took that out. What I like to see on a double bottom is I like to see a higher low. So I would have liked this pattern up in here, making a higher low so that we could connect an upward sloping trend line. We didn't quite get that, but this was a very strong earnings reaction. I don't like trading stocks in the lower right corner. So for me, this one still needed to form more of a base, but this is a nice breakout, and I'll show you this long-term trend line that's been breached. You can see this trend line dates back to July of 2022. This stock has been in a very steady decline. It is starting to form a bit of a base here. It's been able to rally through some major moving averages. The volume yesterday was excellent. Let's take a look at the 5-minute chart. So yes, the stock gaps up, and now it got back to the high of the day where the market really wasn't doing much. That tells me that buyers might be interested in Verizon right here. They also look like they're going to be interested in AT&T. Now here's kind of a classic example of what happens. So let's say that you are looking to trade AT&T after the announcement. You've got this big gap up. Stock was able to hold all of these gains. Everything looked good. Hey, the market likes this earnings reaction. Market was soft. Stock held all the gains. This thing's going to continue to grind higher. So you get this nice rally up, and then all of those gains are given back and then some the next day. So now we're in this gap. You'd ideally, after a post-earnings announcement, like to see this gap up preserved. Well, now we floated back into the middle of it, but you can see how yesterday the stock recovered. So that bid check is complete. On a nothing day in the market, the stock was able to rally back. So these profit takers and these sellers who wanted to get out of a longer term, weaker stock, they've been out. They took their profits on that little pop-up, and now we should see some bona fide buying come in. Again, lower right-hand corner, not the most compelling stock for me to own, one that you really need to be careful with. Great for day trading, great for very short-term trading for a day or two because there's a chance to get a nice bounce and a nice lift up to that 100-day moving average. Is this something that I need to be swinging longer term? In order for me to do that, I'd like to see steady progress through this 1650 level. I'd like to see it attack this 100-day moving average. Not float, float, float higher, peck, 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 peck. No, not that at all. I want to see this. Boom, 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 boom. That tells me I can get behind a move like this because institutions are in there buying. So if I start to see some of this type of price action, long green candles, heavy volume, okay, I can embrace that move. So I hope that this analysis helps you out. I do think that AT&T and Verizon could see some interest. They're relatively safe stocks, got a lot of uncertainty in the market right now. So I could see asset managers wanting to go back into these companies. But as far as the actual stock that I'm going to highlight as my pick of the day, I like SPOT. I like the fact that it's been able to get through this downward sloping trend line. I love that earnings reaction, broke through a couple of high pluses. We're above all the major moving averages. We are probably going to challenge the all-time high at 180. So let's watch the stock over the course of the next day or two. Let's see how the market reacts to these major earnings announcements that are coming out. We want to see the market down, down, down a little bit and the stock treading water or moving higher. So if the market is up and the stock is down, then we know that it's got to test some of these recent gains, this breakout. Again, we're getting in pretty early on this one because this is a compression breakout. We've seen the relative strength over the course of the last 3 months when the market's been down. I'm expecting that any kind of little bid check in here is going to be pretty minor, and it's not going to be big because the stock has been coiling like a spring, waiting for this good news, waiting for the market. Now it's got that, and I think this is going to be a good opportunity to get long. Thanks so much for watching, everyone. I know this is a longer video. I wanted to talk about some of the new features that we've added to Option Stalker Pro. They are going to help us find these best stocks. Good luck with your trading. We'll see you Sunday night.
Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education. So make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.